what I'll be discussing and presenting today. We are looking at ESG, and I will kind of focus on how then ESG will enable us harness insurance market to achieve a sustainable future. Basically looking at where we are coming from an African perspective. Then I'll kind of look at it from a Ghanaian perspective, because we've done a bit of study with the National Insurance Commission a couple of months ago on ESG. Then I'll kind of reflect on where can we really proceed. So kind of introduce the topic, look at where Ghana is, and then maybe look at what we need to do going forward. So maybe just also to give a brief of what FSD Africa is. FSD Africa is a development agency funded by the UK government, and we work within the financial market space to support policymakers, regulators, government to basically come up with regulations that will be enabling both to the African markets, but also to its natural capital. So we work closely to make finance work for Africa's future. So that's basically what we do, and we do this through two instruments. One of it is what we call technical assistance program, but also we do kind of guide and provide what we call grant funding in a number of projects that we've done across the continent. We've worked close to in over 36 countries in Africa, managed to develop close to over 150 policies within the financial markets. Right, so let me then go straight to our discussion today. And basically where I wanted to start from is the role of insurance industry in sustainable development. Now, if you look at what the insurance sector is, it plays a very critical role in terms of developing or supporting economic development. And this can be looked at in three levels. So there's what we call the insurance company's role, which is basically most of the time what they do, the financial risk management. So they enable transfer of risk and de-risk both instruments. So for instance, they do provide insurance products to support the risking of different risks that do affect the financial markets. Then also we've seen the insurance industry coming with the role of investors. So in terms of the amount of money that they collect over time, they can use that money to invest in different assets. So in terms of really leading the asset management role, in terms of providing different capital instruments across the financial markets. Then also we've seen the insurance companies playing a risk manager role in terms of really managing what we call the physical risk management. So in terms of providing advice, in terms of how different financial instruments and even companies can reduce the risk exposure that they have within the businesses. So once you look at all these three things, they kind of lead to what we call sustainable development, particularly within the financial markets. So risk insurance management value chain kind of tends to help us to understand the level of risk through the risk manager's role. They kind of also provide and prevent those risks through provision of products, the insurance products, through the financial risk management role, and also they support that particular transfer through the value chain, whereby the risk is transferred to the reinsurance companies, and that's how then they reduce the magnitude of risk. Within the global market, we've seen close to over $5 trillion of world premium across the world, and this has led to investments up to around 30 trillion global assets under management that basically are forecast from the insurance company's perspective. That basically shows that the insurance industry plays a very critical role to support sustainable development. Now, what basically then comes in mind, and basically I'll start with it from a very I would say where we are coming from the business perspective. We've seen the role of business as kind of evolved over time. So if you looked at the 1980s, the 1800s, we had what we call a neoclassical capitalism. In this case, then most of the resources were used to create profits and accumulate assets for the shareholders' benefit. And that kind of translated or evolved, whereby we saw institutions starting to come up with what we call a corporate strategic philanthropy. And this happens around the 1960s, where organizations started looking at their brand image through providing donations and volunteering on a number of issues that they thought would support the community and the environment. Then that kind of evolved within the 1980s, whereby now we had what we call the corporate social responsibility that now acknowledged that the society needed some support. In this case, then there was need to respond to external issues within the business operation. So in this case, then you could see organizations coming up with programs to support different societies. So you could get an organization trying to do like drilling a water to a community, or basically providing sanitation assistance by maybe doing toilets and such kind of things to communities, because they started acknowledging that the society had issues. Then around the 2011, there was a big shift whereby we started talking about corporate shared value. And in this case, then the societal challenges were recognized as business opportunities. In this case, then the key element was then how then do we ensure that there is no trade-off? So whereby the businesses started working closely with the societies to address those particular challenges by recognizing them as opportunities. And this is whereby now we've seen evolvement of things such as ESG, whereby now that brings the corporate shared value within the business strategies. And that kind of has really had a big impact in the way people are currently looking at businesses. So the expectations of business have really changed, and that has been driven by a number of factors over time. We've seen issues around climate change, issues around COVID-19, issues around mass connectivity. All these issues kind of have really impacted how investors are now making decisions, how the consumer preferences are changing every time, but also how then do we engage employees and how then do we create policies. So there's a very big shift around how then we are going to look at the decisions that investors are going to make, because those particular decisions are highly looking at societal issues and challenges that the societies are facing. They don't want to create more harm to those particular societies. We are getting customers that are more conversant with the needs of nature and the needs of the environment. So kind of pushing the products where they want them to be. Our employees are becoming more aligned to social issues, and they kind of really pulling their employers towards meeting their needs, but also in terms of policy making, regulators and governments are looking at how then they can streamline the financial sector to respond to these particular changes. And within that, then we've seen some of the challenges that have kind of impacted over time currently being addressed through issues such as setting up businesses that will meet the societal issues, looking at societal leadership as a core function of the business, but also trying to break that cycle of distrust, particularly within the financial sector. There's a very interesting document, Elman Trust Barometer for 2022, kind of highlighted some of the top 10 things that have really impacted and have really kind of changed the expectations of businesses within the financial sector. Then basically what I would come to explore here is how have the countries, how have the companies kind of shifted their corporate purpose. And that basically brings us to the discussion why ESG is really, really important. So we've seen a number of companies currently looking at how these particular components are changing over time. So for instance, if you look at the NESO, they no longer talk about food. They're nowadays talking about nutrition. So it's more of like, we are not only focusing on providing the food or basically becoming the part of the food system. They're looking at how nutrition can be part the discussion, because there are so many issues that are really affecting human health, particularly in terms of the food that we take and the food that we eat. In terms of maybe on the oil and gas sector, we've seen organizations such as BP now talking about not only oil and gas, they're talking about efficient energy. And maybe if you've also seen the Total, currently they don't talk about Total as a company, they are talking about Total Energies, because there's a shift of looking at what are these other sources of energy that really will commensurate to the needs of the society and the needs of the environment. Also, we've seen IBM, they've kind of moved from just talking about computing, they're currently talking about smarter cities. So more of greening of cities and kind of providing smart cities in the future in terms of their business proposition. An organization such as BASF that deals with drugs, they're no longer talking about being a chemistry kind of a company. They're talking about how then do we enable life. So in terms of really looking at the business value and connecting that business value to the societal needs. So some of these institutions have kind of gone ahead and tried to repurpose their strategies in terms of enabling them to interact with the societal needs and the environmental needs. So in terms of insurance, we've seen Discovery Health nowadays not talking about insurance, they're talking about health and wellness, and a company such as Stockland that deals with property management, they're now talking about building communities. So in terms of how then do you bring society within the discussion. So then this basically brings us to the discussion of what ESG is, because ESG is basically looking at how we can have a criteria that will provide a framework for understanding the impact and the risks an organization will have beyond its financial performance. So it's not all about how much money or how much profits we are going to make, but looking at if we will make this particular profit at X million cedis, how has this kind of translated into impacting the society and impacting the environment? So ESG kind of looks at three critical components. So how does your business impact the environment? So in terms of my business is going to have this level of impact on the environment, and also the environment is going to have this impact on my business. So for instance, when we talk about issues of climate change, carbon emissions, oil and water pollution, all these are factors that needs to be considered into how then they impact a business, or how will they impact the overall performance of a business. So we'll be able to see clear action points taken on how a business should interact with climate issues, how a business should interact with carbon emissions, how businesses should interact with issues around water and air pollution, how then we look at issues of nature and biodiversity, issues of deforestation, energy efficiency, waste management, and also issues around water scarcity. So ideally, how does your business impact environmental issues, and how is your business also impacted by these issues? Then on the social side, we kind of now look at the social issues that do impact people and their interrelationships. So in this case, then, are we going to provide our customers at what level of customer satisfaction? They happy with what we are basically providing, and how we are interacting with them. Issues around data protection and privacy, because it's important also to ensure you protect that data that is being provided by these particular persons and adhere to their privacy requirements. Issues around gender and biodiversity, how then do we ensure that we have and it's not only issues around women. Is it possible to have whereby there's gender and issues of diversity around them, and even in terms of leadership, how then gender issues looked into that? How then do we engage our employees? How then do we interact with communities? So for instance, I'll give an example here. Assume that there's an industry that is operating at a particular community, and that industry, most of the time, they use the water from the stream that community consumes. At the same time, they kind of put the affluents into the same stream. So how then do you get that a community relationship so that you don't kind of impact the community issues such as not really adhering to human rights and labor standards and issues around cyber security. So ideally, social issues will kind of look at customers, data, gender, cyber and human rights issues. Then we have the last component of ESG, which is governance. How then do you ensure that we adhere to governance issues? And in this case, then you look at issues around board composition, issues around audit committees and structure, issues around bribery and corruption, issues around lobbying and political contributions and whistleblowing. So all this will have a very clear impact within not only on the financial performance of the institutions, but even how then that financial performance will kind of change over time. And these are some of the issues that now ESG kind of brings into perspective when it comes to appreciation of where the world is heading. So then the key thing that we will be able now to discuss is then what do we really mean by sustainable insurance? Because what we've kind of discussed brings us to the key issues whereby we need to ensure that insurance sector supports the sustainability of the economy, particularly by looking at those three issues that we've talked about: environment, social, and governance. Now, sustainable insurance is basically a strategic approach where activities of an insurance value chain, including interaction with stakeholders, is done in a responsible and a forward-looking manner in which it will be able to identify, access, manage, and monitor risks and opportunities associated with those three components. So are we able to look at our activities within the value chain? That means that when we talk about those activities, issues such as products, issues such as distribution of those particular products, issues such as claims payments within the value chain, issues such as investing of the premiums that we've collected, and interacting that with different stakeholders. These stakeholders can be the distributors of these particular assets, it can be investors, it can be the regulators, the government, such that we all that way we identify, we assess, and we manage all the risks and opportunities that arise out of environmental, social, and governance issues. One of the biggest misconceptions most of the time is that we kind of look at ESG as a risk management tool, whereby the biggest issue that people always say is that once you subscribe to ESG, then you don't need to underwrite oil and gas and all that. But in the same time, we look at opportunities that comes through it. So for instance, are we looking at developing sustainable products? How then do we ensure that we reduce the risk, we develop innovative solutions, and we improve the business performance that contribute towards those issues that we talked about earlier: environment, social, governance, issues that kind of impact the well-being of the society. So ESG is important in a number of ways, and I'll kind of break them into four critical elements. So the first thing is that ESG will provide a measurable framework that will not only focus on the financial performance, but will also focus on another criteria, what we call the environmental, social, and governance criteria, to look at how then the businesses are aligned to sustainability of the entire economic ecosystem. So in this case, then we'll track the risks and sustainability of the environment, social, and governance issues. We'll have what we call ESG ratings and metrics. And we've seen also already a discussion whereby the global accounting standard is already developing an IASB standard to support issues around sustainability. Also, we've seen components around risk analysis and resilience. So we've kind of seen ESG promoting how best we can assess and analyze risk and build resilience within the entire long-term strategic alignment of a business. So in this case, then you will see ESG encompassing a broad selection of risk analysis criteria and allowing a holistic risk management to ensure there's long-term resilience within the financial system. So it's not only by looking at what we are addressing now, but how does our business evolve over time and support the community and the environment in the long term. And that basically leads us to the social impact, whereby it's not only the financial impact that we talk about from the way the evolution of business has been. So we also talk about financial impact of ESG considerations that will kind of have a very far-reaching impact. So for instance, the discussion will be how does an insurance company enable gender and biodiversity? Are we basically providing gender-based solutions to our society? So are we getting products that are aligned to gender? Are we investing on green bonds? So bonds that do not have an impact on environment or that doesn't degrade the environment and so forth. So in terms of basically leading the long-term sustainability within the financial system. Then lastly is that we are going to see value-driven investment. So we are not only going to invest our monies the way they come or the way businesses do want to invest, but there'll be an ESG criteria to look at how does that investment drive the long-term value within the society and within the community. So are we investing on, say, green instruments, or in this case, we're talking about those instruments that do support the well-being of the society, or so for instance, somebody investing on renewable energy, or maybe you'll get that a company goes ahead and puts their investment in things such as coal and oil and gas that will have a very big impact on the society going forward. So in terms of looking at all this, we are basically addressing a proposition of creating long-term sustainability and resilience of not only the business strategy that a company has put in place, but enabling the society to be part and parcel that will receive some positive impacts out of what these particular people are doing within their business ecosystem. So ESG is therefore equally important to the insurance industry because it will kind of define relationships within risk management. It will also enable us to look at how insurers play a critical role in transferring severe risks that do affect societies by developing what we call responsible tools for underwriting and investment, because insurance kind of enable communities and societies to underwrite their risks, but also at the end of the day, they kind of guide and lead the investment practices. And we've seen a lot of interest within the insurance industry over the last couple of months because of a couple of issues that are currently being discussed. So for instance, we've seen key stakeholders, including major institutional investors, demanding for greater ESG accountability from the insurers whose reputation could be affected. So we've seen organizations such as the World Bank have issued an ESG criteria on their investment. So for whenever they want to kind of put an investment in a particular company, I mean IFC, the International Financial Corporation would want to put some money on any institution, they would kind of require to see the level of ESG accountability. So that kind of drives the need for institutions to start thinking keenly on issues around ESG accountability. We've also seen ESG presenting an opportunity for developing sustainable insurance products. In this case, you can talk about products that are focused to green buildings, products that are focused to renewable sources of energy, products that are focused into reduction of carbon emissions and providing carbon credits within the financial sector. So in terms of how then we see there's embedding of these particular components within the insurance products fraternity. Also, we've seen global regulators are currently integrating climate-related issues within their supervisory processes. So, for instance, we've seen the England, the United Kingdom releasing what we call climate-related guidelines on risk and solvency assessment, whereby when companies will be looking at their own risk exposures and solvency requirements, they need also to look at how they integrate climate-related issues and risks within their business portfolios. Also, we've seen requirements, particularly the disclosure, whereby now institutions will be required to disclose on ESG. So, for instance, there's Task Force for Climate Financial Disclosures, TNFD, and also we have Task Force of Nature Task Force on Nature Financial Disclosures, whereby we talk about TNFD, kind of really guiding what should be disclosed, because there's one thing that always happens: if there is no proper disclosure and a proper framework around it, there's something that currently we call as greenwashing, whereby institutions will pretend to be part of greening the financial system, but at the same time, they're not doing that. They're just providing figures for the sake. And that's why regulations on ESG disclosure is really, really important. And that's where maybe organizations such as NIC will look at guiding that particular process to avoid issues whereby people will not be providing rightful information. Lastly is the issue around ESG in ensuring sustainability. Recently, we saw United Nations Program of Financial Initiative providing what we call principles of sustainable insurance. There are 5 principles that kind of look at how the insurance industry can support the United Nations environmental program, particularly on financial initiatives. So these are very good components that will kind of guide us to push us towards sustainable economies and sustainable environments. Africa is still highly exposed, and that is something that all of us are aware. In terms of what we contribute to global emissions is quite minimal. I think we are the least contributors of these challenging times that we have in the world. But in terms of the vulnerability within the continent, this is something that is at a high level. So currently is estimated around 30 out of 40 most climate vulnerable countries are in sub-Saharan Africa. So that basically means that there's need for us to look at how then we address these issues. We've experienced quite far-reaching droughts and also flooding, particularly in parts of West Africa. Recently, we had a flooding incidents in a country such as Malawi. We've seen Mozambique being impacted with climate issues. So there's need to look at how best we can be part of an idea that basically transforms what we are currently exposed to as a continent. Also, in terms of African countries, we are highly exposed to extreme climate patterns. In this case, then I've talked about issues such as drought. I've talked about issues such as floods within different parts of the continent. We've also seen that Africa GDP could be cut down by around 30%. And this is because we are highly dependent on issues of nature and climate. So if we don't really address these particular exposures, it will mean that if you look at our GDP, particularly within the African continent, if we kind of lose 30% of that by 2050, then there's something that really needs to be done across the ecosystem. In terms of some countries are already incurring losses up to 10% of their GDP, particularly on issues of climate and nature. They are also increasing their budgets to support and to support these issues, drought and disaster recovery programs that kind of is impacting their GDP and budgets. over 23% of African GDP is dependent on nature. So whenever you see that tree outside your homestead, really 23% of that that we see outside the buildings and what is naturally within the environment, it kind of controls 23% of our GDP. The biggest challenge is only 3% of global green finance goes to Africa. And I think these are discussions that we've been having as an organization with various institutions on the global north to basically pay for what they have kind of led us to experience. So I think these are discussions that has been ongoing. We saw that at COP27, whereby we talked about loss and damages. African voice was quite strong that there's need for the global north to start paying for the exposure that they have caused the continent. And what basically means that is that we need to start also realigning ourselves towards enabling that to happen by creating an environment for those particular transfers and transactions to happen. In terms of the risks, we've kind of see that climate and nature-related risks are the biggest long-term risks. If you look at the top global risk in 2022, climate action failure still led. We saw risks such as biodiversity loss, human environmental damage, extreme weather events, and natural resource crisis were some of the top risks that were there within this particular impact scale that was kind of put in the year 2022. This is something that really means that there's need to look at ESG more closely to really enable us to address some of these particular risks that will have a very big impact within the financial system. Now, the biggest question then would be, how does climate threaten the financial sector? And also I'll kind of try and discuss how other issues, because climate is only one of the pillars within ESG under the environmental pillar, but also we've seen social issues and governance issues having a very big impact within the financial sector. Now, if you look at the economy is highly being disrupted by a number of issues. So we've seen business disruption risk. We've seen issues around migration, people trying to move, issues around capital scrapping, and all that is highly impacted with the physical risks that we are currently experiencing. So for instance, if there's a drought, if there's flooding, the businesses will be interrupted. Maybe these people will not be able to open their shops, or they might not be able to move around. Some people might need to migrate and move from those particular areas that they seem to highly exposed, and that will have a direct impact with a number of channels. So for instance, think about an insurance company that has commercial property, and that particular property is flooded, or they have invested on residential property and that particular property is flooded. The next thing is that they might not really be able to attract the rightful maybe capital. Those particular buildings will be vacated, so they will not be able to get investment income out of those particular properties. At the same time, assume that they had provided insurance on those particular properties and they are flooded. So underwriting losses in one or the other will increase because they have to pay for those particular claims. So we've kind of seen physical risks having a very big impact, not only on the asset side of the balance sheet, but also on the claim side or the liability side, because they kind of increase the exposure and kind of increase the amount of claims that needs to be paid. Also, we have issues around transition risk drivers. So we know very well that the government will kind of now start coming up with what we call climate policy that will enable their countries to transition towards a green economy. And that basically will mean that there's need for reconstruction of maybe different structures that are within different countries. So how then do we create what we may term as flood resilient buildings or such kind of things? It will mean that they might think about reinvestment, because maybe under the climate policy, the regulator and the central banks might require them to invest in a particular line. So in terms of that, you'll see some financial market losses might come up because of maybe investing on instruments that are not within the climate policy angle. We've seen technology issues around consumer preferences, whereby customers will require a particular commodity. We've seen also issues around increase in commodity prices and energy prices that, again, has a very big impact within the financial infrastructure. Also, we have what we call liability risks. So here we'll kind of see it's where the people seeking for compensation, because they have kind of worked on their physical and transitional risk, and they need to be compensated. So in this case, then you'll be able to see corporate assets being devalued, profitability and increased litigation coming through, because they need to kind of now shift to what they term as green investments and that kind of things. So there's quite a direct contagion effect to the economy, but also there's what we call a very indirect transmission channels that we'll be able to see within this discussion. Now, then this brings me to two compelling issues. So when we talk about greening of financial sector, we have two key things that we need to kind of understand within the financial markets. Now, there's what we call greening finance. In this case, then we'll be able to see integration of climate and sustainability issues into financial decision making. So this is the point whereby the regulator will kind of play a very critical role in terms of supporting greening of financial sector. So how then do we integrate ESG issues into financial decision making? And that basically means that we'll need to provide them with guidance to start greening their financial sector, to start greening the insurance sector. We'll kind of come up with modalities of integrating climate and ESG issues within the business strategies, and that has to be led through by policies and regulations, at the same time enabling a clear avenue of disclosure around the greening of this financial ecosystem. Now, that is something that needs to be done, because as we've seen the impact and what really needs to be done, there's need to start thinking about greening finance. Now, the other thing is financing green, and this will kind of be looking at how then we upscale green financial products. So is it possible to set up or to encourage the insurance industry to start selling renewable energy insurance products, having carbon embedded insurance products, insuring say hybrid type of vehicles that kind of lowers carbon emissions and so forth, providing opportunities around this by enabling innovators to start developing and upscaling such products. So this will come from the market development angle, from a regulator's perspective, because as we kind of streamline greening finance through prudential regulations, we need to start thinking about financing green through market development products by encouraging and really providing a platform that will enable them to create these green financial products and solutions. So I wanted just to kind of bring this into perspective so that we will be able to kind of further understand how the entire ecosystem works. Maybe just to also kind of dive deeper around this, when we talk about greening the financial sector, there are a couple of issues that will come into play. So We'll think about it from non-financial regulation, and this basically will come from ministries such as Ministry of Environment, Ministry of Natural Resources, whereby they kind of will have what we call environmental legislation, right? They'll also come up with natural resource management and sectoral regulation. So more of how then do we transition our economy towards sustainability, towards adhering to the ESG framework that we kind of brought in earlier. Then we have also from the financial regulation side, and this is whereby organizations such as National Insurance Commission play in terms of how then do we develop both micro and macro prudential regulations, how then do we support disclosure of sustainable reports, how then do we come up with taxonomies. When we talk about taxonomies, is more of like naming what are these clear blueprints that needs to be provided for when it comes to financial regulations, and also in terms of labeling of financial products. Will we have a criteria whereby we can say, okay, fine, these particular products are sustainable products, these products are not sustainable? Are we able to kind of attach risks and risks towards some of these particular products, and maybe also provide incentives for those guys that are kind of having more products that are more sustainable. Also, from the central bank's perspective, we'll be able to see a lot in terms of the monetary policy issues, particularly on financial instruments such as green bonds. How then do we ensure that interest rates, how do we determine the discount rates? What are the reserve requirements? Because we are basically creating a new sets of financial instruments that also we don't want to create an imbalance within the monetary policy and the financial systems. So also we have issues around fiscal policy, including public finance, issues around taxation. So we'll kind of can get what we call credit tax for those guys that will be driving more and more emissions. So the governments might think about issues around credit tax. They might be tariffs around the fiscal policy infrastructure, issues around subsidies for more green related products and sustainable related products, issues around public expenditure and procurement might be guided through sustainable insurance, sustainable development issues. So again, a widespread of physical policy issues that might really need to come through. Again, here is whereby in case maybe your financial regulations that you are going to release, you might want to provide some incentives. It might kind of be aligned to the fiscal policy. Also, we have the wider public and policy legislations, issues around the task force for climate-related disclosures, which is international. We've seen issues around TNFD, issues around net zero. So all these are standards, including the Paris Agreement that different governments have signed to, kind of now come through the wider public policy and legislation issues. So there are quite a number of issues that will enable us transition to the real economy and towards a sustainable future. So let me then come to Ghana. What is currently happening? And this is basically a report that we did, the study that we assisted the National Insurance Commission to conduct. Thankful to management of the National Insurance Commission for allowing us to work with them on this particular study. So we did an ESG status in Ghana, and we kind of looked at what is the ESG integration at the national level. It's true that ESG adoption in Ghana is gaining momentum, and we've kind of looked at a number of initiatives that are at a national level that kind of gives us a very good alignment of the issues that I kind of talked about earlier, the non-financial, financial, wider policy issues, fiscal issues, and all that. So we've seen the government of Ghana has captured the country's planned resource to climate change in Ghana's National Adaptation Plan. So this kind of looks at the wider policy issue that looks into integrating climate change as one of the key elements within the country's response to issues around climate change. And that kind of opens a very good discussion on what next should the financial sector and other sectoral players have in mind when it comes to aligning ESG issues within the regulatory space. Also, we've seen the Green Finance Study in Ghana, which examined the current green economy landscape in Ghana and identified opportunities for green finance programs to be implemented. So these are another interesting document that could guide what realignments that needs to be done within the Ghanaian market. Over and above that, we've seen the Ghanaian government commitment to achieving the SDGs, which will create a more resilient economy, and this has been evidenced under the country financing roadmap for SDG Insight Report. And again, if you look at the entire alignment of all the discussion, looks into supporting the Sustainable Development Goals that were some of the key goals that most of the time we are looking into achieving within various financial markets, but also through the non-financial initiatives that are being conducted in different countries. Also, we looked at the ESG status in the financial sector, and we kind of aligned ourselves with what is happening within the banking sector in Ghana. So the Bank of Ghana and the Association of Bankers and the Environmental Protection Agency have worked collaboratively to produce what we call a sustainable banking principles and sector guidance. Now, there are key learnings here because already we know within the insurance sector, we have principles of sustainable insurance that also organizations such as National Insurance Commission can learn from and kind of develop and issue guidances on these kind of things. So we've seen the banking sector providing the sustainable banking principles and sector guide that provides specific and comprehensive principles to aid in creating a more sustainable banking sector, and that has been further broken down in various sectors in the economy, providing detailed approaches to different economic sectors. So it's a guidance that provides direction to the banking sector on how to incorporate even climate-related risks into the strategic and operations management of the bank. So again, some work is currently happening around ESG, particularly on looking at sustainable banking and kind of aligning that to climate-related risks within the banking sector. Also, we had a check. We've seen the capital markets working with IFC, whereby the Ghanaian Securities Exchange Commission, SEC, has facilitated investments in projects that address climate and environmental issues through items such as green bonds. And that kind of brings up to speed to the direction that, yeah, there's a commitment, there's partnerships that is already creating a buzz within the capital markets. Okay, while there is no official release on this matter yet, but this collaboration ideally shows willingness for ESG adoption within the Ghanaian capital markets. I've deliberately left the insurance sector because, again, I would say that is something that we've already started working with NIC, and we did some study and had a project with NIC whereby we are looking at the gaps and opportunities within the ESG space. And out of that discussion and out of that diagnostic study that we did, we managed to kind of capture a couple of gaps within ESG. So for instance, when we talk of the environment, there was no explicit mention of the environmental aspects outside the banking sector. That means that there's still something that needs to be done within the insurance sector because there's only mentioning of climate-related risks within the banking sector. When it comes to social issues, there are areas of data protection, gender and biodiversity, including employee relationships, are still missing. And again, we haven't really come across any significant mention of cyber risk. If you remember some of the key components under social risk, we are supposed to look at issues around customer satisfaction, data protection, gender, and all that. So there's some work that also we still need to do on the social side. When it comes to governance, yeah, I know there's need for better diversity for the considerations. One thing to mention is that there's already an alignment, particularly within the insurance sector, on the board composition or for the insurance company, which is something that is well crafted and kind of addresses some of the issues around ESG. But there's need to also basically come up with guidances on issues of whistleblowing, issues of corruption within the insurance sector, and what elements does the regulator advocate for when it comes to some of these governance issues that might impact the financial sector or the insurance sector. So we are working with NIC to integrate ESG, and the project that we did was to answer 3 core questions. And this and the project really focused in reaching a comprehensive understanding of the existing gaps on ESG factors, adoption by insurance regulators, in this case NIC, and how then would we be able to create a regulatory environment for improved adoption of ESG factors. And we kind of looked at it at 3 levels. The first thing was, what is the status quo for ESG adoption by insurers and insurance regulators? And that basically led us to come up with a comprehensive report on the ESG health check within the Ghanaian market. We went ahead and looked at how then we can support insurers to better integrate ESG considerations within risk management, underwriting, and capital adequacy processes, because these are the key components under the insurance sector markets. So here we kind of looked at how can we start supporting the insurance market to start understanding what are the risks around ESG and how does that connect to their risk management infrastructure. How can they improve their underwriting by considering ESG risks and ESG opportunities, but also how does that affect their capital levels within their businesses. Then the last thing was to look at how can insurance regulation or policies integrate ESG considerations. And here, the first document that we came up with was like a guidance note for NIC that would really enable us to look at what are the next steps in terms of issuing policies and regulations to support the adoption and integration of ESG within the insurance sector. Something to note is that will also help the supervisors, and this is something that we are going to help NIC in terms of how they can access risk profiles of insurance companies, particularly in realignment with the exposures on ESG risks and services. I know that this is something that we will be able to take up this year again because we kind of managed to complete the first phase of this particular project. Last year, we will be discussing closely with NIC on how then we can continue with this particular work, ultimately with looking at how then we can provide some policies and regulations and circulars within the sector to support this integration, and that kind of will kind of put us at speed with the banking sector in terms of addressing the ESG risks the way they have already started putting down various considerations. So maybe just to recap on common themes, and this is really important for us to just understand why this discussion is important. When we talk about governance, we know very well that NIC requires insurers to embed, or NIC will require insurers to embed ESG issues in decision making, particularly on issues of strategy, risk management, and also at the same time we'll see regulators will expect to see insurers providing an evidence on how they monitor and manage financial risks from issues such as climate, which is in line with their risk appetite statement. So ideally, more requiring the insurance companies' boards to be at the forefront to provide direction on how ESG risks impact not only the strategy, but also impacting their risk appetite elements within the financial institutions. Also, in terms of risk management framework, we've seen a more alignment on risk monitoring, management, and mitigation, whereby there's need to monitor overall business strategy and look at how that is evidenced on mitigation of these financial risks, particularly risks that would come from ESG related, so environment. How then do companies do scenario analysis and stress testing? How do they understand the exposure that they have there in their balance sheets and so forth? And that's what we've seen various institutions currently trying to implement, more of scenario analysis to understand the impact of financial risks, particularly from issues of climate change on liquidity, ability to pay policyholders, solvency, and such kind of things that would have a very big impact within the business. Also, we've seen issues around disclosures, whereby insurers need to demonstrate accountability and transparency in disclosing publicly on the progress of implementing various principles, sustainable insurance principles, just to ensure that there is no what we call impact washing or greenwashing, whereby they might lie that they are basically accountable and they are really providing much needed assistance towards a greening of the financial markets, yet they are not really subscribed to that. We have issues around investments, whereby we've seen insurers looking at how they can adopt a sustainable approach to their investments based on principles of stewardship. Yeah, I know this is something that we will be keen to work with NIC this year to look at how then we can start realigning development of principles of stewardship that will have some impact on investments requirements and guidelines within the market. Insurers might also need to diversify their assets to avoid issues around accumulation of risk. So more of looking at investment strategies and realigning the investment strategies in tandem with ESG risks and also opportunities. In terms of supervisors, there is need also to look at the inconsistencies, what we call asset liability matching, and ensuring that there is no cognitive, what we call cognitive dissonance, whereby some of their assets are not well matched to the liabilities, particularly when it comes to these new types of risks, the ESG risks. Also, above all, we are looking at companies looking at this as an opportunity from the strategy and business model perspective. How can they ensure that they have done appropriate business model analysis and kind of determined the impact and the opportunities that will come out of these particular risks? So, for instance, climate risk, for instance, new products and so forth within the business proposition and value point. How then are we looking at supporting insurers on this? We kind of have a four-phased approach, whereby once we kind of provide a proper guidance on the regulation, then we'll work closely also with the industry to help them develop ESG strategies. And in this case, then they'll look at what is their strategic approach and ambition, look at issues around regulatory landscape and track what are the issues that needs to come out from the ESG expectations and assets, then kind of now move towards the ESG implementation stage or strategy, whereby now they need to prepare a roadmap, design ESG governance structure, and kind of come up with some key performance indicators just to know where they are. And above all this, then within this implementation stage, we'll look at how then we educate, how do we train, and how then do we support them towards coming up with systems and policies that will support implementation. Then we'll go to the monitoring and reporting reporting stage, whereby there's need to start reporting, look at issues that might impact data and their reporting standards, and basically setting up a reporting function. So how does this come? Do we really need some reports to even come back to the regulators from the company perspective, or they just need to have some internal reporting structures? Then the last will be more of reviewing the process and disclosures. Where are we in terms of the key performance indicators? Where are we in terms of the stress tests on investment portfolios? and also looking at more of like risk assessment processes, including providing access to these particular reports. This kind of just gives the same component. So we kind of support the industry to come up with an ESG approach, and that will be well articulated through the regulations and the standards that we are going to provide from the regulator perspective, require companies to establish an ESG risk appetite. In this case, then how do they manage the ESG risks and proactively review their portfolios, issues around integrating ESG within the organization. Are we going to require them to develop an ESG governance policy framework that will be anchored through the law to enable them integrate ESG issues within the organizations, but also just looking at how then do we establish roles and responsibilities. So more of like this need to have support in terms of defining critical ESG governance and other subsequent implementation elements. So there's need to ensure that organizations provide resources and personnel to guide the ESG process. Most recently, maybe if you've checked out, you've seen there are so many organizations that are currently trying to recruit for what we call sustainability officers and so forth. That's basically to lead and guide on these particular processes. So in terms of the steps, we will look at it on 5-stage processes as we kind of work on the regulations, whereby we'll need insurance companies to start thinking about delegating responsibility and setting up ways to manage ESG risks, kind of develop a risk management infrastructure in terms of developing internal capacity. Now, the next thing would be starting looking into their business more from a strategic point of view. How do they kind of support underwriting of ESG risks, and also looking at how then they can create opportunities for ESG sustainable related products. Around disclosure in terms of how then what reporting requirements will be required within the policy or the regulations. So kind of ensuring that there's a clear way of reporting ESG risks within key metrics and targets. And lastly is whereby now we'll kind of look at issues around their assets and liabilities in terms of now looking at how these outcomes will impact their business, their investment portfolio. So more realigning the investment portfolio and reviewing that to ensure that, the investments kind of resonate well with issues around sustainability. So this kind of just basically expounds further on ESG governance. So there's need, NIC will require companies, board and senior management to identify ESG risks and opportunities, evaluate the potential impact of these risks, and kind of look at how can this be assessed on the short term and on the long run from the delegate responsibility element. And then there is risk management, whereby again there'll be need, and this maybe will be: do we really need to review our risk management function guideline to ensure that they have to include ESG risk assessments? That is something that maybe we'll be able to look at whether there's need to review some of those particular guidelines, but just to ensure that institutions in this case are also required to do what we call stress and scenario testing, just to ensure that they do understand the level of exposure that they have within the marketplace. So new types of risks will be able to come, and I mentioned them earlier. There are physical risks, there are transition risk, and also the liability risk that, again, the risk management function will have to think about, and how this particular climate event will have an impact within the entire business strategic point of view. Also on underwriting, what we see, we will kind of see insurers trying to come up with holistic information to support both ESG transactions and really understand the customer risk profiles. In this case, then underwriting should also include ESG risks. Are we basically underwriting sectors that are highly exposed to ESG risks, and how are we de-risking our business from such sectors? Then lastly, issues around disclosure. There's need to report, look at the governance arrangements, issues around strategy and how that can inform business, insurance business and financial planning, issues around risk management, how do they report on risk management, but just to come up with metrics that will be measured under relevant ESG-related risks and opportunities. So more of how then do insurance industries present ESG risks to the public. I think maybe the lastly is investment. In this case, then there's need to review investment portfolios, look at how these insurance companies can do like stress and scenario testing on their businesses, particularly with the long-term view of ESG changes, but just also addressing issues around outcomes and incorporate necessary changes within the investment portfolio. So again, we'll kind of deliberately look at the investment guidelines and see how that really resonates well with the business proposition of really investing on green instruments. I think that's the end. Just to conclude, we are looking into working closely with NIC to still guide on this particular process. We've kind of managed to get the preliminaries on the ground. We just need to now start working on the policy and regulatory bit to kind of realign with the industry requirements and to adopt the ESG practices, not only from the risk perspective, but also to enable the industry look at the opportunities that come with the ESG adoption and integration. I'll stop there, and maybe if there are questions, I'll be happy to respond to. Thank you.
Thank you very much. Now, I think the floor is open for any questions and comments. Madam Chair. Madam Chair.
Yes, sir.
Thank you. We now know you have joined. Thanks, and we are very happy that you have joined us.
My apologies. I had an accident with my communication, so my apologies. But I think I got most of it. So please continue. Please continue.
Now the floor is open for questions and comments, if any. Members and management, we are waiting for your questions and comments.
We don't have any question per se. There's a roadmap that we discussed with Malayas and his team, and this training is part of it. The training for the NIC staff, some has been done. There's more to be done. There's training for the industry, and in the industry too, there's training for the directors and for the practitioners as well. So we are looking forward for the rest of the roadmap to be rolled out. And of course, the development of the guidance or the ESG regulation. So there's a whole roadmap, and we are looking forward to following it from here. Thank you.
Thanks. Any more?
Elias, I would like to ask a quick question. This is Kesoa Brown. The banking industry have their principles in place. Are we going to do a separate one, or are we going to be looking at it from the financial sector point of view?
Yeah, I think that's a very good question. Now, we know the banking industry has always moves ahead. So they already have some financial principles that they developed some time back. Out of that, we also have what we call principles of sustainable insurance. So we've also, the insurance industry has kind of developed some principles that we might need to work with, more of developing those particular principles to be fit for purpose, but also proportionate to our sector. So I know we have that global UNEP principles for sustainable insurance, but we need to kind of bring it within the Ghanaian perspective and also maybe through an African perspective. So I think that's something that we might need to do as a sector, not borrowing directly from the banking sector, because also we have our own principles, but using those particular principles and to integrate them within our size and the approach that we are taking as an African country or as a continent, and that can basically be rolled out through guidance notes and so forth. And I think that's the next stage that we'll be working keenly to ensure that we start providing such guidances, because it's something we can basically get and put within our own market infrastructure and our own market level of capacity that we have within the market. So ideally, as we kind of build capacity within the sector, then we kind of create these particular principles that can easily be adopted and be implemented within the marketplace.
Okay, thank you. So just to follow up on this question, are all of them coming out from the global, because you have your global principles and then everyone is carving? Are they all coming from the same global principles, or there are different global principles for each industry?
Yeah, so we have a global principle for each industry. So there is
okay.
Yeah, so we have the one for the banking, so more of sustainable financial principles. Then we have a principle of sustainable insurance. I know there's a principle of stewardship code that is currently being developed for capital markets. So within that, we have our own global principle for insurance sector. The only thing that now we need to do is that to make it fit for purpose for our continent, because again, the level of sophistication and the capacity is also different. So for instance, we cannot say, okay, fine, tomorrow we want all the insurance companies to be net zero. They cannot manage that. We need first maybe to assess where our insurance market players are. How then do we kind of transition them towards sustainability? Maybe when you talk about products, they might not even have capacity to develop those particular products now. So within maybe the structure that we'll be developing, we'll kind of look at how then do we enable capacity building over time to enable them start developing these sustainable insurance products going forward. So we'll kind of have a fit for purpose and proportionate guidance for the industry that enables them to grow with it over time. And with that then, because it is from a principle perspective, it will allow them to quickly integrate and adopt those particular principles within the level of support that we can give, but also the level of capacity that they have in place.
Okay. Then last question. What will be the top 3 things that, as a regulator, you believe that even though we have the current economic challenges, as a country, what will be the top 3 things that you think will be required of us as a regulator in the next 12 months?
Yeah, so the first thing is that there's need to provide guidance on assessment of ESG risks from an industry perspective, just to enable them to know where they are. It's usually good to start by allowing everybody to know where he is, The next thing is that once we kind of have a guidance on assessment of ESG risks, is the next thing would be to develop capacity within the sector, more of enabling the boards of these insurance companies and management to come up with roadmaps in terms of looking at how then they address their ESG risks and ESG opportunities that will arise out of that. So that's the second thing, building capacity, first assess, second build capacity. And the last thing is basically come up with reporting. So how do they start reporting on where they are? So kind of providing a guidance on to the industry on what are some light reports. And that will kind of have what I call a 360 view of the industry, whereby you assess, you have capacity, and then you have to you report. So we'll kind of see how then we need to kind of provide some guidances on those particular areas to really push the industry towards implementation of what you kind of asked earlier on the principles of sustainable insurance that are already in place. So we kind of adopt that, aligning them to those three key components within the sector.
Thank you very much.
I think from what you've said so far, then NIC will have to formulate a framework for the insurance industry to deal with the environmental, social, and governance risk implications of climate change, and how these, when the insurance companies have adopted this, at what stage or point are NIC going to monitor to ensure that they stick to, or they stick to the framework that has been developed for them?
Yeah, so once NIC provides a guidance on basically integration of climate-related risks and other ESG risks within the sector, then there is need to provide like a reporting framework. So does it mean that they'll be receiving what we call stress and scenario tests on climate-related risk, and that is what you kind of see the banking sector have started with. That they kind of require the Bank of Ghana requires the banks in Ghana to kind of provide a report on stress and scenario tests, particularly on climate-related risks. They're also looking at other issues such as social risks. So in terms of if a company is going to or a bank is going to issue more of like green related products and so forth, how do they kind of track that over time and in terms of the impact that is causing? So from my view, I think there's need to create a guidance on climate related and other ESG risks, and kind of have a reporting structure that will kind of, the NIC will be reviewing over time what is the exposure that the industry is having, a particular company is having when it comes to these types of risks. So I think that would be a structure that we'll be discussing with management on how then we can enable some of these things to start being enacted within the marketplace.
Thank you. Thank you.
There's some hands that have been raised.
Mrs. Kote, Peter.
Sorry.
Yes.
Sorry. One of the areas, Elias,
Okay.
one of the areas that we want to focus on is agriculture insurance.
Yeah.
We are at the nascent stage, trying to, at least get the industry to look more proactively in this area. What has been your experience? What has been your experience in relationship to insurance and agriculture, and the fact that we have to look at ESG, the environmental challenges that could affect the agri sector. Any food for thought for us?
Yes, so that's a very good question, and basically I'll also kind of connect it to the sustainable insurance products perspective. Now, agri is one of the what we call a sustainable insurance product within the financial sector, and that's an area that Africa really needs to think about, particularly through what we call an Africa climate risk capacity or capability. What has been there in the past is that we kind of look at agri from a climate mitigation perspective, and there's need to, as we develop maybe this policy around to propagate and support agriculture within different countries in Africa, there's need to kind of look at it from a climate adaptation component. So whereby we are not only going to provide agri insurance from a mitigation perspective, but also within the policy that we are going to create from ESG perspective, we'll also look at adaptation. So we do provide an agri insurance, but are we going to also enable those particular communities to start adapting to various changes within the climate? Because in the past, we've kind of looked at mitigation mechanisms, which might not really effectively work in the continent. And there's need now to develop agricultural insurance policies, not only as a mitigant, but also as an adaptive element. So in terms of what I think within the frameworks that needs to be developed is kind of looking at agri insurance from an adaptation component, just to align the business components within the insurance piece. I'll give an example. There's a program that we are calling Drive, more in the East African market, whereby it's not only looking at de-risking of agri risks or climate risk, but also looking at what are the other adaptive elements that we can enable farmers to get within that particular package of agriculture insurance. So I think that's something that might require some form of framework, and then through NIC and the Ministry of Agriculture and the government, kind of bringing all these components together, more of a national, and this is something that I've already seen in the Ghanaian National Adaptation Plan, that also kind of stipulates some of the adaptation mechanism that needs to be implemented around climate. And that's where this particular framework can be anchored to support the agri space within the Ghanaian market. So it's important to not only focus from a mitigation perspective when it comes to agri insurance, but also looking at how then we can provide adaptive mechanisms around that particular framework that we need to develop to propagate and catalyze agri insurance within the Ghanaian market.
Thank you.
Now, Gita.
Yes, thank you. Thank you so much, Elias, for the insights, and I guess taking us into maybe a deeper dive into some of the key driving concepts. But I see a big interdependency, really, with obviously what government is doing, what even is happening in the investment industry with possible green bonds and all that, and obviously what we can do to impact the insurance industry. So I think it's important that even as the industry is being trained, there's enough interaction between the various, the different bodies really and arms of government and other industries, so that we can kind of move in the right direction. I think my question was, even as all that is rolling out, and obviously it will take some time to crystallize, what can we do, within the commission itself, even as a commission and internally? Is there anything we can do to sort of create the right mindset, perhaps amongst ourselves, as a board and even the staff, so that it's it lends itself better to rolling out the program that we've discussed this morning.
Yeah, I think we cannot really estimate the power of interactions, and I think that's why when we were discussing through the slides, I was looking at it from the sector perspective. There are so many interdependencies within the financial sector. So, for instance, we indicated that insurance companies are asset managers, and they will need instruments to push that money to. So, for instance, the insurance industry or insurance companies might need to put those the amounts of that they have collecting over time on things such as green bonds. So again, this capital markets perspective that comes out of that in terms of the investments. At the same time, we'll be asking the Securities Exchange Commission in Ghana, what are these other instruments that will kind of give us an opportunity as an industry to invest in? So, and from the banking side and monetary policy side, the incentives, interest rates, and all that. So there is a lot of interdependency that we'll be able to see aligning across the financial markets and also across the government. And that is some of the things that we might need to kind of get the levers on how we can connect to that. In terms of what can we do now in enabling this, I think there should be a very clear policy from the board perspective, particularly from the NIC board, in terms of what is the strategic alignment that they want to see coming out from NIC as a body to support various stakeholders within the insurance ecosystem. So be it insurance company, be it customers, be it brokers, agents, like what is the overall board statement when it comes to ESG adoption and integration. Now that will kind of provide a direction to where the NIC needs to take the insurance sector. The second thing will be more of like, are we able to kind of provide insights? And this will be in terms of trainings, in terms of sessions with the industry to kind of see what is the strategic thought of the regulator in terms of really rolling out ESG in terms of how this should be adopted over time. So what I see is that there's need to have that strategic direction from the board. And the next thing is basically providing those trainings and connecting that to those three activities that I kind of mentioned earlier when on the initial question on what are these three things that we can do within the 12 months. So that's something that we need to kind of come up with a direction from the board on what needs to be done on ESG, develop a series of capacity building initiatives, not only to the insurance sector, but also to the people that are going to interact with customers in terms of agents. They need to know why this is important. When we go to our sensitization sessions with during consumer education, what is our strategic thought on issues on ESG from a high level perspective? What do we really want to achieve? And that kind of, with that kind of strategic direction, it can now be aligned to the central government that this is what we want to do as NIC on ESG. It can be aligned to other sectors, and that will give you an ability to plug in or with all these interrelationships. At the end of the day, then we kind of now start doing capacity building to the sector, and then roll out the three activities I did mention earlier that we can try and implement within the 12 months. I know that those long-term issues that might need to be addressed. So we can kind of create short-term, medium-term, and long-term strategic view of how we will integrate ESG. Some long-term issues we look at, even like how then do we interact with, say, the capital markets? How do we interact with the banking sector when it comes to investments and all that? So some of the policy issues might go beyond NIC, and that might need to be articulated within the strategy and how then you can initiate those particular conversations. But for now, I think getting that directional statement of what the board wants to see from ESG perspective, and then kind of setting up sensitization sessions will be some of the things that we might need to quickly look at and define going forward.
Madam Chair, I think your hand is up.
I'm sorry, it's from the old one. I'll let it down.
The old one, yeah. Prof. Well, then I think at this stage, Madam, I would like to ask you to give us your closing remarks and bring us to a close. Thank you.
Acting Chair, thank you very much for the opportunity. Ilias, I want to thank you for the time made. I know that ESG has been something that we have started globally, and it's seeping down into the different continents. Africa is being impacted severely. I think we all can even see it with the different patterns of climate change. Now, I think with me, my major concern is the fact that we are actually, as a country and as a region, going through economic challenges, and at the same time, our survival is based on the seriousness in which we actually are going to look at ESG. So for going forward, I believe that coming from what Gita said, we need to ensure that we as a regulator lead by example. And therefore, we should ensure that we put in place things that we want we want to see in others, starting from our own staff and management and we as a board. Once we can do that, then when we require the industry to move forward, they can point their fingers at us and say that, okay, this is not something that we are just doing, but something that we are leading by example, and therefore makes it easier for us to influence them to do the right thing. I know it takes some time, but I think that my expectations will be that management will look at a 12 to 18-month plan that we would be able to support the industry, support ourselves as a regulator, and be able to make some strides within the next 12 to 18 months as to what we need to do going forward. So I want to thank Mr. Franklin Asafwaje for stepping in. And I want to thank you, Ilias, for your time. And of course, I'm sure we are working with Sandor and the team, and we will probably be engaging you more on as we learn more and as we get challenged by more issues. So thank you very much for all the board members who could join. I want to thank management for joining. And I recall that in our 2022 financial or our annual report, I was hoping that we did mention, and we were at the beginning of ESG. So I think the journey has started already. We've got good guidance, and hopefully we will make sure we we get to go where we really want our industry to go. Thank you very much.
Thank you.
Thank you. Madam, no closing prayer.
I think
they are gone.
Yeah.
Okay, never mind.
Okay.
Thank you.